I want to bring in now Wall Street Alliance Group, their partner, Aadil Zaman. Aadil, so let's talk about this. Second half of the year, you're saying it's going to be rocky. In part, you point to the big, beautiful bill in the bond market, what they're telegraphing right now.
Yeah, so we called for this. We spoke about the market rising in the first half and then pulling back falling in the first half and then rising in the second half. But we do feel that one of the concerns in the market...
Let me just jump in 1 second. That the rebound note was a lot quicker, I think, than anybody. You didn't model for it to come back this quickly, this V-shape, because we're not even through the first half yet, and the whole one-year scenario is played out.
Well, we actually, on your show, one of the things that I had mentioned was that first 6 months, the market is going to pull back because of new policies. Second 6 months, the market's going to go up because Trump's pro-growth agenda is going to kick in.
Right.
That's exactly what's happening. We do think second half the market goes up. Along the way, there's going to be jitters related to the bond market, the deficit, the big, beautiful bill.
Let me talk about this, because this is, folks, this is your schematic, right, for where the big, beautiful bill can go. So we're here right now, but it can go this way, it can go that way, it can go this way, it can go this way, then that way. Then eventually it will get to the president's desk, we hope, right? We hope it doesn't go back around. But, I mean, when you look at all the variables here, how does this impact you as an investor?
The variables are good because it creates volatility. The volatility creates opportunity.
Right.
On those pullbacks, you want to be a buyer. Because eventually what a lot of people, Charles, are not realizing is that this whole deficit issue can get resolved with GDP growth. When the internet came about, there was huge productivity increases which caused GDP to grow. And we feel that with AI, that's going to be one big factor that's going to cause productivity growth, that's going to create GDP growth, and potentially we could grow out of the deficit issue.
Now, there's two things I noticed in your note. You first, protect portfolios, which is not something we hear a lot, right? Everyone's like, go, 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 but this is realistic. And you, in part, sectors, utilities, financials, and consumer staples. Is there a certain portion of the portfolio that should be in these sectors?
I think one of the issues that we saw with a lot of people was that they were very concentrated in their exposure. So our advice has always been be broad in your exposure in this market. That's how you protect your portfolio. Utilities, we've been talking about this for a while, benefits from the AI boom, financials benefit from deregulation, consumer staples stabilize. Gold has been one of the best plays in our portfolios this year. That has gone up more than 25%. So our clients have really benefited from that. And we really feel this is the time to add some international exposure, because that, from a relative valuation point of view, is underperforming the U.S. for a long time.
Let's talk about some specific stocks here. Tesla is a name that's under some pressure today. It's made a pretty nice run. A lot of doubters. And we were just talking in this conversation with Nancy about the robot delivery folks. Optimus and Robotaxi. Is that what you're focused on right now with them?
Yeah, so Tesla, this is, again, one of the things you really want to do is you want to be opportunistic on the declines. This is where you can be opportunistic. Stock is down significantly. I think there's a huge opportunity because the Robotaxi announcement is going to come in June. And now we've got Elon Musk with his focus back on Tesla, which could potentially benefit the company substantially.
Costco, in a period where there's been hit or miss, for some retailers have gotten hammered, some have been gone up. You know, it's been odd. But is this just because it's such a steady company?
Costco has an edge in this type of a tariff environment because they've got their recurring revenue that is coming in from the subscription fee. A significant portion of their profit is coming from that.
Right.
So where other retailers are suffering because of higher prices, they've got that consistent revenue stream. And the consumers will benefit because where other retailers have to raise the prices, the relative value proposition from Costco is very attractive.
You know, when Sam Walton was alive, he said Costco was the only one he couldn't beat. Even Sam's Club, he admitted their business model is unbeatable. Aadil, good stuff. Appreciate it, my man.